One of the biggest myths in the investment management business is this whole idea of stock research. Let me tell you the history of stock research. Back in 1995, I had the good pleasure of having the assignment to manage about a $400 million mutual fund. We managed it from St. Louis, but it was sold in northern Italy. One of the places was in Venice. In 1996, I had the pleasure to visit Venice. Our local partner over there was a nice fellow named Stefano, and he brought me out to St. Mark's Square in Venice. If you have ever been to Venice, Italy, it's one of the most unique places in the world. And Stefano points to this bell tower that was built in 1505. He goes, Jim, this is where they did the first stock research. I said, Stefano, what are you talking about? He goes, well, the story goes is that these wealthy Venetian merchants had these ships that would sail out of Venice, go to the Mideast, bring back nuts, fruits, silks, spices, whatever, and come back and sell them in the marketplace. Well, it didn't take long for the not so rich guys to pool their money together. These were the first corporations, the first syndicates. They pooled their money together and they bought their own ships and they went sailing out to the same destination in the Mideast to bring back nuts and fruits and silks and bring them back and sell them in Venice, competing with the rich merchants. Well, these early syndicates adorned their ships with various colors and ribbons and bells, and they were very distinctive. And if you ever go to Venice, you'll see these various stripes on these piers, these docks. They're yellow and pink and all kinds of different. Those are remnants of the early syndicates, these merchant syndicates. When these ships came back, there was all kinds of people up in the bell tower waiting for these ships to return so they could alert the families and the syndicate that the ships have returned. Well, supposedly one day, this lore, these stories are lore, but it makes some sense. One of these fellows up in the bell tower, the story goes, noticed that this ship was awfully low in the water and it was carrying silk. He knew it was carrying silk because that's what the colors indicated. So he ran down the steps, ran into the marketplace, and told his friend to lower the price of silk before this new information, this new supply of silk came into the marketplace. So that was one of the first stock research, if you think about it. Someone up in this bell tower discovered something about the new supply of silk coming in that the rest of the market didn't know about. What do you think the first commercial use of a telescope was in Venice in 1505? Do you think it was a look at the moons? Or was it look at these ships coming in? Of course, soon that whole bell tower is filled with people with telescopes looking for these ships to come in. I asked stock analysts today, tell me about your telescope. Tell me about what you're going to find out about a stock, a bond, a commodity that the rest of the market has not already factored into the current price. And what stock analysts really want you to believe is that they're going to find something. Pick a stock, Apple, Ameren UE, Ford Motor Company. They're going to find something about a stock that is meaningful that the rest of the market doesn't know about. Now, in today's day and age, this information instantly transported all over the world. These analysts want you to believe that they're going to find something meaningful about a stock, that they're going to advise you to move on this information before the rest of the market knows about it, and then have the rest of the market recognize what they missed and have that price move to your advantage. I mean, this is absurd if you think about it. Look, the only thing that's going to change the price of any stock, any bond, any commodity is new information.